I don't know how many years I've come here. Must have come for almost all the galaxies. So I make it a point to ensure that I'm there. Always my colleagues tell me I'm most cautious, and all the MFDs in Chennai are bored of hearing me being cautious. But I believe that if blue chip has become 50,000 crores and Discovery has become 40,000 crores, it couldn't have been by being cautious. So I thank all of you for making blue chip 50,000 crores and Discovery 40,000 crores. And I think it's more important that neither of these funds have a capacity issue at this point of time. Whereas if you create categories where there is a capacity issue, that can be a problem. And of course, it is a task to talk today after your 6 p.m. talk yesterday. So that is a challenge that I have today when I'm speaking to all of you. So having been a stockbroker for 10 years and a primary period in Chennai, and also having been in this business for almost 35 years now, see, one of the lessons I've learned is that we have to make money for our customers. And once you make money for your customers, it's a very good long-term business. And to make money for your customers, you need to actually periodically slow down. And like I mentioned in MFRT a few years back in Bangalore, there is a time to be in fifth gear and there's a time to be in first gear. And that is the biggest challenge of this business. And if you don't know how to be in fifth gear at times, and if you don't know how to be in first gear at various points of time, this business becomes a problem. And this is something I learned by managing my broking firm, and I was involved in broking, and also when I ran infrastructure fund. So I think over the years in this IFA Galaxy, we have given various calls, and I think most of the time, frankly, we have had the challenge that we have been able to give reasonably positive calls, except in 2018, if you can see. It was just ahead of a fall where we gave a balanced advantage and credit risk fund call. And in 2019 also, which was ahead of COVID, where we actually gave that call. And 2020, it happened, I think, near Mahabalipuram, if I'm not mistaken. At that point of time also, we were very cautious. And 21, of course, was something which was one of the best years to invest in. So somewhere, this challenge, and last year, for example, we made our clear advantage that we could push multi-asset, and the whole industry has taken over multi-asset. And multi-asset has been a great category for 2023, actually. At lower risk, it gave very good returns. So given your entire thing of striving, investing, and prospering as your entire goal for the conference, I was trying to think, what is it that you need to do? So I think, as everyone says, we have to get many more customers into this business. The challenge is not with the existing customers. The challenge is with getting the new customers. And I think many of you are going to make, in my opinion, mistakes. Because in this process of striving to get new customers, if you get people into aggressive categories, just based on performance, I think we'll end up with disaster. So it's very easy for people to say, okay, get money into India opportunities or something like that. But the fact is that people have to get money into categories like equity savings or balanced advantage at this point of time when the customer comes in new. Because the customer who's new, if you are going to sell them performance, I think it will be like selling infrastructure performance in 2007 and basically selling in 1999 technology performance. In fact, the biggest problem that has happened, if you see also, is that the new customers have all been pushed into the products with performance. If you look at even 2023, bulk of the new customers have come into small caps. And in 1999, they came into technology. In 2007, they came into infrastructure. And because, the focus of this driving of the MFD or any distributors or even the direct channels or even the digital channels has been, they all focus on performance over process. So if you strive and get people into the wrong product, I think then the industry does not grow. So all the people who created new customers in infrastructure in 2007, and I used to tell them at that point of time, don't focus on infrastructure, focus on value discovery or something like that. I think those new investors never then subsequently stayed in the industry because they had a bad experience. So like that, if you are going to strive to get new customers into the market, you actually have to get them into categories like equity savings and balanced advantage rather than getting them into categories which have done too well, like small cap or India opportunities kind of categories, because I think then the whole purpose will be lost, in my opinion. I know most people in this room will not agree because they'll tell me that a 20-year SIP in small cap is superior to 20-year anything else. I agree with them, but then who has invested for 20 years? I don't think if you go and look at the data out of, I'm sure, and I don't have the data, I think others have the data. I don't think how many people have invested in value discovery for 20 years. It will be 1% of the total or 0.5% of the total. 99% haven't invested in value discovery for that 19 years. So if you are that 0.5%, yes, it is true, but 99% of the people did not stay in value discovery from 2004 to 2024. So when people come and tell me for 20 years SIP, small cap is best, I say yes, but how many of you are confident that they'll do 20 years SIPs? I remember that 2006 to 13, for 7 years, SIP did so badly in mid-cap that nothing happened in that period. And I am quite confident that in China, people would have given up on SIPs. So it is, or in Japan, people would have completely given up on equities. You should see the amount of money we have got from Japan in equities because people have given up hope on SIP in Japan in their own markets. So I think this is the challenge that you are facing, and I don't think it is a problem that you will have to take up. Because as I have seen as a stockbroker, if you keep on trying to get customers who lose money, you will have to search for new customers. And that was an endless process. Whereas if you have customers who stayed with you, I think it's a very, very pleasant experience. And this is my learning, and that is what I would say that you'll have to do in this entire striving point, if you ask me. The whole innovation point, which I would say is very, very important, and actually one of the things that we did at ICICI Mutual Fund, thanks to the support of Nimish and the sales team, was that when I became CIO in 2011, way back, I had two very interesting experiences, one as a stockbroker and second as an infrastructure fund manager. In stockbroking, my experience was that most investors lose money and get out. Of course, I had beautiful customers like Shyam who made money in my broking firm in Chennai. But otherwise, most of the people lost money and got out. And even in infrastructure fund, I had the same experience. So I went to Nimish and said, we have to create products where people won't lose money and therefore will stay. So I call it a situation where you have to create products where people gain by just staying. And with that whole concept, frankly, we focused on balanced advantage as a category. Over the last few years, we have focused on multi-asset as a category. We are trying our best at this point of time to focus on business cycle, consumption, dividend yield, and export as a category. The reason is very simple actually. I call it non-redeemable is the model which works with the MFD. Because the moment you invest in a fund, if you have to do a redemption, let's say in infrastructure fund or a pharma fund or a commodity fund, and in my opinion, it will be required in small cap. So this whole concept of a redeemable fund is a concept which doesn't work for an MFD. Because you can't go to a customer and say, redeem money. And that process doesn't work. And people in India believe that small cap should never be redeemed. Go and take the experience of US small cap recently. US small cap has been a complete disaster, actually. So unfortunately, it's impossible to convey that to people in this room, but you should go and look at the experience. So I believe that, for an MFD, you need non-redeemable asset classes or asset classes which you don't need to redeem. So that is how this whole concept of balanced advantage as a category came up, multi-asset as a category came up. I would say business cycle as a category came up, consumption as a category came up. Why? Because if you invest in a business cycle fund, the fund can be defensive or aggressive. In consumption, when you want to be defensive, you can be in FMCG and pharma. When you want to be aggressive, you can be in retailing. Similarly, in export, when you want to be an aggressive, you can be in banking. If you want to be defensive, you can be in some defensive sector. So I believe this whole concept of a non-redeemable category like business cycle, consumption, dividend yield, export, equity saving, balanced advantage, multi-asset, aggressive hybrid like equity and debt. These are the categories which make sense for an MFD. And that is what I believe is innovation at this point of time. Because the moment you are in categories like infrastructure, or if you are in categories like small cap, these are all categories at some point of time, if you didn't take out money, you didn't make the money. Did people make money in ICICI Prudential Infrastructure Fund? Certainly. But the people who stayed didn't make money. People who invested in small caps in US, they made huge money. But people who just stayed on did not make the proper money. And that is the challenge. And that is why I believe that non-redeemable categories turn out to be far better than categories where you have to redeem at some points of time. And that is what I mean by innovation. Because within the mutual fund space, there's nothing much that can be innovated. You can do freedom SIP, you can do SIP. And people don't understand that sometimes systematic transfer plan is just averaging market upward. And SIP is investing when the market is high. Whereas the beauty of products like equity savings or balanced advantage is selling on the way up and buying on the way down. But these are things which people find extremely difficult to understand. I spent so much of time trailing MFD that systematic transfer plan is just averaging on the way up. And people have said, what is this? Whereas a product like balanced advantage fell is selling on the way up and buying on the way down, which is superior. Obviously, balanced advantage kind of categories. And there also some people have become fixed. They said you'll run it at 50 all the time. Then it is not selling on the way up or buying on the way down. It is fixed categories. So this is the challenge that is there, and that's why innovation will work over the long run. And over periods of time, you have to think, because there was a time we had only balanced advantage as a category for innovation. We started adding multi-asset. And over time, we will add categories within equity, like business cycle or Bharat consumption or dividend yield or export. And that's how we think about it. The third, which I think you have added beautifully in your theme, is prosper. So I spent a lot of time trying to tell people. So I had a person, a director who was 70 years old in my company. So he told me I made X crores of money. Suddenly one day he called me. He said, now where do I invest now? I told him, enjoy the money. So somewhere I believe that, the whole process is, the whole market now says, SIP sahi hai. But why can't it be sometimes booking some profit and enjoying the profit also? If you're not going to enjoy any profit at 22,000 or 23,000 or 24,000 or 25,000, then what is the use of markets? And this is something which I find very strange, that he didn't come and tell me when the market was very low, should I invest more? But once he achieved some big targets, he wanted to invest more money. So I believe in prosper certainly means that at some points of time you have to book some profits and you actually make money. Again, I would say a category like balanced advantage does the prospering because we do it within the fund. But frankly, at some points of time, whenever a category does very badly, and again I actually said it in the Hyderabad MFRT, that there are times when you have to slowly book profit. Because the experience for me from 90s has been that if you did not book profit in 2007, if you didn't book profit in 1994, if you are technology focused, if you didn't book profit in 1999, actually you lost. And I believe that there are years where you have to book some profit and enjoy the money you have made in the markets. Of course, those will be the years where there'll be maximum pressure on you to invest, and there'll be people who will call you and invest. So today, energy is a great theme. But 3 years back, when we bought in India Opportunities, every month I had to explain why we liked energy as a theme, or why we like PSU as a theme. I think it was a challenge for both me and another fund manager to explain to this audience why PSU was a theme or energy was a theme. Whereas today, when energy has quadrupled, people find energy as an interesting theme and PSU as a great theme. So I find it so funny that people find it as interesting themes after things have quadrupled. And that is why I believe prosper actually means. So people come and ask me, investor wants to do it. Why? How can I stop it? Frankly, that is the challenge, and that is why you have a role in society. Your role in society is more important than anything else. So if the investor could do everything, and if the investor knew everything, what is the role? So I believe that in my career as a stockbroker, what I've realized is that there is a role for you, and there is a role for, I would say, the role for the investor. And I don't think the investor will be able to understand these things. That the time to buy PSU and energy was 2020 in a very, very big way. And the time to not invest in quality was 2020. The time to redeem from quality, lock, stock and barrel was 2020. These are things they will not know. And that is why you are there. And that is a challenge, and that is the reason why you will continuously exist and prosper for the next 10 years or 20 years. And if you don't do these things, what will happen? At some point of time, both us and you will get completely caught by index and ETF, because over a period of time, people will say, why do I need you? And index and ETF does this job much more peacefully without any stress. And why am I paying that extra cost for all of you? And this is what will happen over a period of time. And this is, I would say, the role that you have. Because frankly, at a point of time, you have to do this job. And if greed and fear was not there in the market, where is the role for you? There will be points of time where there will be extreme greed. And there will be points of time when there will be extreme fear. How to act against it? Do you think the power stock, which was 1/4 what it is today, was weaker? Did we use electricity less then and today use it more? The answer is no. But at the same time, those stocks were 1/4 then. Why was it then? Why were telecom stocks 1/4 at that point of time or 1/3 at that point of time? We were using our telephones as much then. So that is the beauty at this point of time from our point of view. Now, people ask me, what is the worry at this point of time? The real worry is not in the mutual fund industry. I would say that the real worry at this point of time is in the broking industry. And there I would say that there is a huge challenge, if you ask me. The huge challenge at this point of time is that in the broking industry, there is just too much of leverage. So everyone has been told that there is a huge benefit of, I would say, SIP. So SIP will ensure that the markets don't go down. Do people know that at this point of time, there is a 3,55,000 crore open interest in stock futures, which constitutes leverage? There is a 55,000 crore margin funding, which constitutes leverage in the broking book. And these are published numbers. In addition, there is an open interest in stock options, which runs into almost 3 lakh crores. So the amount of leverage which exists at this point of time is so high in the direct equity market. And I would say, compared to the way people are acting in the direct equity market, people are acting much, much more disciplined in the mutual fund market. The mutual fund industry and the mutual fund distributors are not seeing that much greed as much as they are seeing in the direct equity market. But unfortunately, these markets are interconnected. It is like saying if global financial crisis brought down Indian markets, like that, I believe that the direct equity market can bring down the equity market. And when people keep on thinking of SIP, please look at the kind of leverage which exists at this point of time in the direct equity market. I have been part of the direct equity market from early 90s, and I can tell you it is just unbelievable the kind of leverage which exists at this point of time, the kind of activity which exists at this point of time. And that market has a very, very good chance of creating turbulence. Now, people ask me, what about the long term? I think the long term is fine. I don't think there is any problem in the long term. But long term was always fine in India, even when I graduated in 1989, when the market was at its bottom in 2002 and today. But doesn't mean that there are no cycles in equity market. Today, when I have to talk to all my colleagues in my system, in my company, there are such few fund managers in the mutual fund system who have seen 2008. So they don't know how to handle redemptions maybe. They have not seen big bear markets. There are so many fund managers today who have not seen a big fall in equity markets. These are all some of the challenges which exist at this point of time. So, and therefore, what happens is the way you will have to handle your money has to be handled very carefully. At the end of the day, we are handling public money. And in my opinion, at the market top, you have to be much more careful. And you have to be less careful when the market is at its bottom like 2020. Having said that, there's nothing wrong with the long term. So if you're going to be willing to hold patiently for the next 5 years, 10 years, and you will definitely not buckle in between, I don't think there's a problem. Thank you all for giving me this opportunity and wish you all the best.